Hey everyone, it's James Nash and welcome back to the Options Trading Masterclass. Today we're talking about actually getting started with trading options, like actually placing those trades. We'll cover everything from finding the right brokerage to navigating option chains and executing your trades. So, buckle up because this is where the rubber meets the road and we're diving right in. Alright, so you're ready to start trading options. The first thing you need, a brokerage account. But not all brokerages are created equal, especially when it comes to options. Big mistake. This is your hard-earned money on the line, so you need a brokerage that aligns with your trading style. First off, fees. Look for brokerages with low or even no commission options trading. Trust me, those fees add up fast, especially if you're an active trader. Next up, platform usability. You're going to be spending a lot of time staring at charts and analyzing data, so the platform needs to be intuitive and easy to navigate. Finally, make sure the brokerage offers robust tools specifically designed for options trading. These tools can give you a serious edge in the market, so don't settle for anything less. Okay, you've got your brokerage account all set up. Now, let's break down the actual process of buying options. First things first, you need to select the underlying asset you want to trade options on. This could be anything from a stock like Apple or Tesla, to an index like the S&P 500, or even a commodity like gold or oil. Once you've got your asset locked in, it's time to decide whether you want to buy call options or put options. Remember, call options give you the right to buy the underlying asset, while put options give you the right to sell it. You need to choose the expiration date and the strike price for your option. With all of that figured out, you're ready to enter your order. Hit that buy button and you're officially an options trader. Now let's talk about order types. The two main order types you'll be using when trading options are market orders and limit orders. A market order tells your broker to buy or sell your chosen option contract at the best available price in the market right now. This is great if you need to get in or out of a trade quickly, and you're not too concerned about getting a specific price. However, with a market order, there's always the risk of slippage, which is when you end up getting a worse price than you were expecting. That's where limit orders come in. With a limit order, you set the maximum price you're willing to pay to buy an option, or the minimum price you're willing to accept to sell an option. This gives you more control over the price you get, but your order might not get filled if the market doesn't reach your specified price. So, which one should you use? It depends on your trading strategy and your risk tolerance. Okay, let's talk about option chains. Think of an option chain as a menu of all the available options contracts for a particular underlying asset. It's organized by expiration date and strike price, making it easy to compare different options contracts side by side. One of the most important things to look at in an option chain is the open interest. This tells you the total number of outstanding options contracts for a particular strike price and expiration date. Higher open interest generally indicates greater liquidity, which means it's easier to buy or sell those contracts. You'll also want to pay attention to the bid and ask prices. The difference between these two prices is called the spread, and it's essentially the cost of trading that particular option contract. Finally, you'll see something called the implied volatility, which is a measure of how much the market expects the price of the underlying asset to move between now and the option's expiration date. Alright everyone, that was a deep dive into the nitty-gritty of how to trade options. Remember, options trading can be a powerful tool for generating returns, but it's crucial to educate yourself thoroughly before diving in. Stay tuned for the next video in our Options Trading Masterclass series where we'll delve into more advanced trading strategies and risk management techniques.